Alright, how we look in reality? Alright, I wish fucking Joshim would. Let me. There it does.
So I am.
Okay.
All right, good to go. Go ahead, should be good now.
Alright, everybody. So this is going to be our kind of week one, trying this out. I've been wanting to do something like this for a while, where it was kind of just me on the mic with whoever wants to join, kind of talking about not so much the, I guess, strategy side. I'm gonna that's what we'll be talking about today, but I don't want to keep this 100% strategy side, like, you know, exactly the technical analysis and how everything works. More so how to actually apply it, right? And how it can filter into how you're already trading, maybe how you want to alter your trading, why something's not working as of right now, little things like that. Today, kind of keeping it simple with you guys with time price correlation. And also, if you guys aren't in the stream on Discord right now, go ahead and join that. I've got the slideshow pulled up there. So kind of go through what time price correlation is. So, you know, it's basically saying, okay, so what time of the day is going to be affected differently on a more than not basis, right? We all know that trading's not 100%. So one of the simplest ones is when the market opens, 9:30 a.m. the New York session. You know, there's going to be a surge of volume, or, you know, buyers and sellers entering the market as per in response to maybe, you know, 9:20, right? There's not as many people 9:20, 9:30 hits, boom, market opens. So we're looking for times like that. Some of the main ones would be 9:30, 10 o'clock. As I trade the NASDAQ, 10 o'clock for me is pretty consistent, that you're going to get a pretty decent spike, more than you would at other hourlies. And then 3 o'clock is another pretty common one. It's the end of the day, you're going to get a lot of sell-off for anybody who's been holding for that day. So utilization for it all, you've got the first one, avoidance, usefulness, cause, and strategies. So going through all these again, it's not 100%. I'm going to go through each of these categories and explain a bit deeper on what I mean and how you can use all of these for your strategy, or if you're creating a new one based around this. But it's very important to know that just because you see, or you know, okay, hey, it's, you know, let's say you're trading the 5, right? You're trading the 5 minute, it's 9:55. You got 5 till 10. You know that on the NASDAQ, it gets a little bit sketchy around that time, especially if there's news. Maybe you hold off. Does that mean that when 10 o'clock rolls around, if one day you feel like it's gonna hit, you shouldn't go for it, or some days you feel like it's not gonna hit, so you should? No, we know that's not how trading can work. You know, in any case, if you decide to implement this, it needs to be consistent. And maybe you look at news rather than just the hourly. So, avoidance. Again, you can see in the little picture I have there, this is the day that I traded, and I had an entry on that little red doji candle right before the massive green doji. And now, for me, I should have gotten out at break even. This pushed up first, hit the 1R, but then came back and stopped me out. So, am I going to say that every time I'm on 10 o'clock,
Just cut out, Landon. Rithmic here. I think we may have lost him. Landon, you there? Thank you, Ace. I didn't even realize the music was on. Thank you, thank you. Landon has went, went away. I don't know what happened here, sadly.
Uh-oh. I got disconnected.
Yeah, you've been
Reality?
off. Yeah, you've been off for a little while.
Oh shit, really?
Yeah, since about avoidance.
About avoidance.
Yeah, it was just after avoidance, sadly. And then you went off. So it's been most of the slides that you've been through here.
Damn. All right, let me see. All right, I'll keep an eye on it. If it happens again, I'll have Joshim pull it up.
Okay.
Okay, so then I'll move on past avoidance. So you guys, you didn't get through anything on the usefulness slide?
No, we didn't get through any of it. You were actually on the first slide, moved to the second slide, and then yeah, we didn't even see that. Yeah, we didn't see that either. I mean, we saw it, but couldn't hear you talking. So yeah.
Gotcha. Okay. Well, hopefully, like I said, if it happens again, I'll have Joshim take over, or because all I need is him to stream. Okay. Well, no problem. I'll just go through what I was saying. So avoidance for everybody. Hopefully you did hear me before when I said, these things are not going to happen 100% of the time, right? We've this 10 o'clock candle. This was a trade that I took, right? Spiked up on me. This trade should have been break even. Unfortunately, it spiked back down too quickly, and I got stopped out. I look at this, and now, for me, the way I trade and the way I know it trades, I'm not going to immediately say, okay, I no longer take trades at 10 o'clock, or I'm not going to take a trade that I know will put me into that 10 o'clock field, right? It just doesn't happen enough for me to make that big of a step. But something I will say is if I know 10 o'clock coming around, especially if there's news, maybe I'm going to have my, take profit or stop loss rather get automatically set to break even if it crosses the threshold where my TP1 is, right? Rather than me manually moving it. I take a little bit of care, take a little bit of extra time if I know the volume pushes are going to hit, just to ensure that things like this don't happen again. But I'm not going to go as far as to say 10 o'clock coming around, I'm not taking any trades, because it would actually end up losing me. I have the data to look through and be like, okay, well, it's not enough for it to actually negatively impact me. So again, there are other ways that you can look at, quote unquote, avoiding or using these time differences throughout the day. Now, again, going into that, I've got the usefulness of it, right? Knowing when these areas are going to hit, very, very important for you to actually be able to use them to your advantage. But in this picture, you can see really easily, that's your first part of the day, right? Bottom, like the start of that green box, that's around your 9:30 area. Pushing all the way up, it's around 2, 3 o'clock to about the end, right before that gray box starts. You've got a lot of energy pushing up and a lot of points to be gathered there. So if you're trading and your stop loss is kind of big, well, then you can't be trading at the end of the day. You just can't because there's not going to get any movement, right? And that's pretty consistent. Of course, you're going to have those sell-off periods that we talked about. But in this instance, and what I've seen on NASDAQ at least, you're not going to get enough of a sell-off for your stops to say be 20, 30 points and actually get anywhere with it, right? So if you end up having to trade the end of the day, you have to go to a lower time frame, right? That could be one way that you're using it. You know that you can't afford to sit on the 15-minute with large candles. You've got to be on the 1 or the 2-minute. Let's see. Okay, so cost. Again, talking about that consistency and where we see them start to drop off, right? Down at the bottom, I've just got a little screenshot of 3 days, just a volume chart. I'm sure all of you guys have that on Trading View. Start of the day, every single time you get those big peaks. Everything's starting to come in. Everybody's entering the market. Before that, there's not moving on. After that, and hour, 2-hour period, you start to sell off. But throughout that day, you're going to see a little bit of peaks here and there. Are those going to be something that I can really use as a strategy? Not necessarily. I don't think so on a consistent basis. But what I can say is, as the end of the day comes around on a long scale, I know that my positions maybe need to be a bit smaller. Maybe my stop loss needs to be a bit tighter, right? If news comes in, that's going to affect it. If you had a very, very low volume throughout the day and then there's a big news discussion going on, that could cause a lot of people to come in all at once because we know that there were people sitting on their hands waiting for that time to hit. And even still, at that last day on the 7th, you can see down there at around 3 o'clock, kind of what I was talking about with that sell-off period. You got 2 or 3 big candles right there at the end of that day. You're not really going to want to be in something right then. Now, are you going to be able to predict that every time? No. But again, just adding this to the roster. Now, going into the strategy side of it, right? This was something that I have some back-tested data on it, right? I know it itself is a back-tested strategy and it works because it was something that was taught to me a long time ago, but just kind of wanted to show you guys some real examples of how you can implement this into a strategy. So this is your 2 p.m. trade, right? End of the day, what we're looking for here is large sell-off. Now, this was tested for stocks because you can trade a lot of different assets. A lot of different stocks are going to move differently throughout the day, so that's what I'm going to be showing here rather than futures. In this example, you can just kind of, it's a few lines drawn, but sells off during the day. There's no real encouragement for it to come back up and meet that open. And we get a little bit of a bump right at the end of the day. Usually that's going to be those short sellers selling off their position into buys, right? Like we saw before at that 3 p.m., except, it was the opposite. It was buyers selling off into shorts. And if I can pull up, okay, I'm going to show you guys. So right here, a little bit of choppy action in the beginning, but this was a chart that I had pulled up a couple days. You get that same real strong stuff throughout the day. 2 o'clock comes around. It's kind of hard to see down there at the bottom. Oh, no, I can't really zoom in on it much. We get a higher low, right, accompanied by the previous higher high. Put your entry at higher high after. You can see that it starts to break and make that new higher low. Entry gets triggered there. Hold to VWAP. Now, looks like I forgot to throw the VWAP on this chart. I'm just kind of showing you, wherever VWAP is, it would have hit in this trade, right? It goes to the end of the day. This is a great thing to have if you work a morning job, right? Maybe you can't come on to the charts till later in the day. here's a way that you can take advantage of that end of day sell-off. See, and I've got one more. I can. Oh, okay. So here's a view. You can kind of see how it sold off during the day. This is the same chart before. Made that higher low, get triggered on the high, previous high, rides up. Here's another. This one's a bit less extreme, but same principle, right? You get entered at around 130 is when that higher high was made, right? Comes back around, makes your higher low, set your entry for the previous high, gets triggered, and it doesn't do much, right? It's choppy. These are stocks that kind of, they had a huge open, right? So I believe this one was especially extreme because it was at like $1 or $2, and then when it opened this following day, it was up to about $10. So it had a huge amount of pressure in the pre-market session. So when I'm looking at this, I know that it's going to want to try and come fill that gap. That's a variant of a fair value gap in a sense, right? Coming down, it doesn't quite fill the gap all the way, but you're getting enough sell-off that when you come back in to enter, the end of day sellers are going to look to sell their position and enter in as buyers, and that's what's pushing this back up. Now, again, this specifically, so this specifically isn't something that you would try to incorporate into your current strategy. This is a strategy all on its own. I know that there are a lot of you guys that are trading that 9:30, right as the market opens to close, and you're mostly trading futures. But using something like this where you can see that there is a strategy defined around the sellers or the buyers at the end of the day getting out of the market and pushing that volume back up is something that I think all of us can just be aware of for most cases, right? So going over again, these weekly, what I'm going to try and keep it weekly seminars, I want to focus on the main parts of it being not, hey, here's a strategy, here's how you use it, and this will make you money, but more so introducing new ideas, new ways that you can experiment with your strategy or developing new ones, and mainly focusing on the point that it doesn't work unless you trade it the exact same way every day, right? Even like I said, I'm not avoiding trades at 10 o'clock. I'm just being a little bit more aware that when that time comes around, or even 3 o'clock if I'm trading that late into the day, that I can't necessarily change everything about it. I just need to be, okay, cool, it's coming around. Let's make sure I watch this. If it starts moving fast, maybe I move my TP or my stop loss, move it to break even a little earlier, right? Instead of hitting TP1, it's right under there. I know it's volatile. Let's move it to break even just a little bit earlier. Very minor adjustments. But so that's where I'm gonna leave it now. If you guys have questions, I'm gonna read through that chat right now. What are
You
you
want
thinking, Reality? Is there anything that you want to latch on to? Just added stuff?
to? No, not really, not really. If you want me to add, I took the chat off of the stream just because it was in the way of what you were doing. So either if you want to read the questions that you're going to answer, or I could put the chat screen back up. It's completely up to you.
You mean on the YouTube side of it?
Yeah, yeah.
Okay, here's what I'll do. I'll open up separate browser. I'll pull up YouTube real quick because I don't even have that pulled up. I was looking at the Discord chat.
Well,
It'll take me 2 seconds.
Well, there's no chat on. I'll tell you the ones that come on any of the rest of social media platforms. What I'm saying is chat. Yeah, the chat itself's not on YouTube. So if you are in Discord answering questions, you either have to read them or else I'll put it up over your screen, whichever you prefer, so that everybody else knows what you're answering, right?
Oh, I see what you're saying. Yeah, no, I'll just read them aloud. Okay.
Beautiful. All right.
Let's see. One time Forex, AK. Okay, yeah, I'm seeing where I lost connection there. So why not enter on the higher low? Okay, so I assume you're talking about, let me see, who's that? Club Chow. All right, let me pull that back up. So Kleb, you're talking about, are you talking about this first image here, why I don't enter on the higher low? Okay, yeah, so main reason I'm not entering on the higher low is I want to make sure that this actually creates that higher low, right? So for candle formation to make what I'm looking for, right? You have lower lows, lower highs, higher lows, higher highs. In this example here, you've got a lot of lower lows and lower highs, right? That's what creates a downtrend. Now it reaches its bottom, right, at 2 o'clock. Rowdy, can you see my mouse on the stream?
Yes. Yep.
Okay, okay, good. So right around that low, that's our final lower low. Comes back up, it creates a lower high, right? Because our previous high was up here around that 130 area. It is still the lower high. Comes down, but it makes our first higher, first higher low. Because our previous low is lower than our new low, right? That's what we're looking for. But I want to make sure that this isn't just a little blip in the market or a moment of consolidation where it's going to then turn on us and not actually creating that higher low. So I wait for it to come back up and meet us at the previous higher high, because if it meets us there, that secures that this is in fact a lower or a higher low. If I were to take it right here, there's a good, not a good chance, but there's a chance that it just ends up continuing to go down and that there was no act of selling off to go back up. So that's why I'm just really looking for the candle formation. Yes. I enter over there once it breaks. Gotcha. And you can see if I pull up that other one here on this one as well. See, I'm not getting entered over here on this strong green candle or blue candle. I'm actually getting entered way over here at 3 o'clock. That's just where my entry gets set, because that's where our previous lower high is that follows into a higher low. Then we know that we have confirmation later into the day. Now, again, these are just two examples that I was able to find on the current day, which was I think like 3 or 4 days ago. Yeah, something like that. As I was going through a stock scanner. No, I understand. I thought you entered where it's marked off at like the beginning. Yeah, no. That's on me. That's just where we set our entry, where we get entered later than that to make sure the formation's there. Let me go through. If you guys have any other questions, just going through whether it's on any of, anything that I went through. I know I went through it kind of fast. I didn't want to linger on anything, or I'm sure I repeated a few things a good few times. But if you have any questions as far as the avoidance or the using of it, or what causes it, let's see, got a few people typing. How you manage your trade when you set break even? So if I'm setting my trade to break even, I'll take it a step further than that. If I'm entering a trade, my quote unquote management of it is very, very minimal, right? And this refers to all around. This is not just for this strategy or that strategy. This is just the way that I believe I should be trading. I'm not going to say that's how you should be trading, but just where my understanding is with the market and how I've been able to create profits is once I enter a trade, I have rules set that say when my break even gets set and where my take profits go. There's no real management after that. So for this strategy that we're talking about right now, I would say once you hit 1R, right, or even less than that, depending on how big that, let's see, I'm going to pull that up real quick. So for something like this, right, once you see, and again, I don't have the back-tested data to give you a 100%, hey, here's where your break-even should be set, and here's where your intermediate take profit should be set. But I do know final take profit does go at VWAP. That is a part of the rule set that was placed upon it. But those little things are something that you might have to tweak and adjust for how you trade it. But even if you were to say, it hits 1R, set your break-even stop, and then hold to VWAP, great, that's your trade. If you want to say it's something like this one over here, where that final take profit, which was the end of the day, right, all the way at the top was the last candle of the day at 4 o'clock or 3:55. That was like 1.3R, I want to say, from memory. So in a case like this, maybe you just look for the strong candle. Maybe once you enter that trade, if you see, oh crap, here's people really selling off or buying off into the market and they're selling their short positions, that's when you say, okay, I'm setting my break-even stop because it's pushed up enough. I know this is where most of the volume is going to come in, and I don't want to get caught up in any consolidation while I'm in drawdown. There's a lot of different ways that you can have a workaround in this.
All right, Landon. On YouTube, Ace asked, will this be regular trading hours or electronic?
These images right here are regular trading hours, just to bring it down, but the pre-market data of it, what you're looking for there, if you have electronic or extended hours on, excuse me, for this type of strategy, I would be looking for large jumps in the upwards direction, I guess. I'm trying to find my words here, but basically saying you want to see price go from pretty normal, for, hang on, let me pull this one back up. Here we go. This one you can see that it opened well above where it was the previous day, right? If I had that pre-market data on, you'd see a lot of jumps in price to go from where it was the previous day to here. And the reason you're looking for that jump in price during the pre-market time is so you know that most of the day is going to be coming down to fill that gap. If you're looking for any normal stock, and you can use stock scanners for this, FinViz is a great platform. I believe right on their homepage, they actually show what the gappers for the day have been, whether it's gap up or gap down. But we're looking for gaps up to fill that empty space, and then at the end of the day, we need those sellers to fill their position, and in which case we'll be buyers. Hang on. So from Joshim, how do we look at falling/rising knives if we are to incorporate TPA? And with that logic, how can we apply that to all lumps of liquidity intraday, like vectors and major swings, right? Okay, so I think I understand what you're asking. And basically, how are we to incorporate, and correct me if I'm wrong, how are we to incorporate large dumps onto a single candle or single, like whatever time frame you're on, single candle that either pushes straight up, pushes straight down, and if it comes later into the day, like one of those times that we know maybe news is hitting or it's a major hourly candle where price should be coming in, how do we adjust for that since we already know there's a lot of volume into the market? And I would say for this strategy in specific, if you're seeing that there's a lot of volume in the start of the day, that's going to be a good sign for you because you know that volume has to go somewhere, right? If you see that there's a lot of sellers throughout the day, that's great. You're going to continue that on through the day because we're not looking for any recovery points. That was something that, you pull this up. Yeah, right here on the actual rule side of the strategy. Looking for 4% plus drop off with no signs of recovery through the day, right? So if there's heavy amounts of volume coming in and it actually fits the parameter of our strategy, then it should all be selling liquidity. When the end of the day comes and you see that higher low has been made, we know that this is the start of those sellers buying off their shorts, and we should get a push to the upside. can be multiple candles too. Second, we see the way price is moving.
Also, when you're done with that, Landon, I got Ace asked, is this strategy more suited for indices?
Honestly, here, I'll answer that question first, just because it's in my head. I don't have data to 100% say whether it works better on indices rather than, I assume the counterpart would be commodities, right? Is that right, Reality? Am I using that?
Yeah, I mean, you could say that, or metals, or, yeah, I mean, whatever. I mean, what were you
Okay.
using it on, I guess, right?
Yeah. So I will say for certain this was back tested on stocks, right? Company stock. So you're not. I wouldn't even really recommend this on something like a futures platform or forex platform, because those are such strong assets that if you're seeing something that's like a 4% move in the downside off the open, right, and there's no sign of recovery, well, that's not just the Nasdaq. That's all the companies that are within the Nasdaq. So now it gets a bit more tricky, and it's not as simple as saying, well, hey, there's a bunch of people that are selling off this one stock. We know they have to go somewhere, and the odds are they're going to buy at the end of the day because this had such a huge gap. This isn't really a long-term stock they're looking to short. This is a, hey, this stock gapped up, let's short it, right? That's what we're thinking most of these people are thinking, and we're just looking to buy in when they sell off their shorts. So to answer, I guess, the best I can, I would leave it to the stock side of things. And if that's not something you trade, then just kind of take away some of the things I've said and apply it here and there, like I showed earlier with the 10 o'clock candle.
Fair,
All right,
fair.
now let's see. So with Joshim, yeah, it could be multiple candles too. So how do we see the price, the way price is moving, and also use time? Okay, I see what you're saying. So again, when you're looking at time as a way to use it as a confluence for volume, right? I'm not an expert when it comes to, every day I come to the market and I know, okay, so this time's gonna even news trading, right? I'm not an expert when it comes to saying, well, I know that news hits around this time and this time for today, so I'm going to try to avoid, or I'm going to try and take advantage. But on an everyday scale, right? If I go into it and I see something, kind of like that 10 o'clock candle I was showing on this slide here, I'm not going to take heart a huge move right away, uh, even if it's at one of those specific times, and say, oh, great. Okay, here's the direction of the market. Here's where we're going, right? More so, I'm going to look at it and say, okay, I know why this happened, or I believe I know why this happened. It's because 10 o'clock rolled around. We had this huge move. I am not really going to change my thinking into, great, we had this huge green candle. I'm going to try and follow the trend to the upwards direction, right? So again, you're looking at it from our view of saying, maybe it's Landon Day, maybe it's kind of random. You're getting a few green candles, right? Let's just pick a random time. It's 1:45. 1:45, no news, nothing. It's just kind of, it's 1:45. And you see a big push to the upwards direction, right? That might be something for a few candles. That might be something where I say, okay, well, now I know that there's a lot of buyers that are coming into the market right now. Maybe I do need to start thinking that we should start buying. But if, and I'll use the different time, right? If 3 p.m. comes around, right, or even 2 p.m., and I'm looking for my strategy that we were looking at before for the higher low, and I see a bunch of sell off right at the end of the day, or right before I'm about to get entered, do I think that that's a good time to buy, regardless of what the strategy says? Probably not, because that's a better indication that we're not done selling for that day, right? You have to be able to know, is the market actually beginning to change? Or is this a time where we know a lot of buyers or sellers are going to enter the market and create, what would sometimes be considered manipulation, but not really change the direction of the market? Does that kind of help explain what I'm saying, Joshim, when it comes to not hang on, which indicator you use to see a VWAP? I said maybe you have yours that you think is the best one. Honestly, here, I'll pull up my. See if I can get my trading view to pull up. You know what, Clep? I'll say it should just be the regular. It should just say VWAP, nothing extra. It's a really common one. If it says something, well, actually, here I can pull it up on my phone. If it says something different like VWAP and then an extra and whatever, I would say stay away from that because it probably has something that's not the traditional VWAP. And remember, the only reason indicators are supposed to work is because other people use them, right? They don't actually have any bearing on the market. It's just, the 20 EMA only works because a lot of people use the 20 EMA and they say, okay, well, it came down to this price and moved. Let's see, indicators. I think it's good. It's standard. Yes, that's the one. Just says VWAP. It should be the first one that shows up. I would take away the divergences, which are those green lines on there. You don't need those. You can use them, of course. They're nice if that's something that you want to trade within, meaning the VWAP is something that you use as a middle point to kind of consolidate between those two outside divergences. I've definitely done that in the past, but for this strategy in particular, and even still, the blue line is what you're looking for. But going back to what you kind of talked about earlier with the setting break evens or take profits, if you were to use a divergence as your break even point, that's not a bad idea. But again, you need to back test these things. And then even after they're back tested for, I'd say, a minimum of a month of data, then live trade it for a minimum of a month of data before you think of making any more changes. That's the biggest issue I see with people is they learn something like this where, oh, hey, 10 o'clock rolls around and there's going to be a lot of volume. I should try to get out before then. No, you have no reasonable sense on why you would do that, right? That's just an added confluence to have in the back of your head that you backtest and then live test on a paper account. And then if that works, then you apply it to your live trading. Now, everybody, I'm going to have to conclude it here. I do have to get to my evening job. I've got work in about 18 minutes. But if you do have any other questions that need answered, you can go ahead and DM me. It should be open. If not, send me a friend request and I'll accept it. But reality, I think we're all good.
Very beautiful. Thank you, man. Appreciate it. And do you plan on doing the same time every week, or are we just going to see as time goes here?
I don't want to say for certain sure it'll be the same time. This is, I will say for next week, again, it'll be a different topic, and I'm glad we had this little trial run. I'll make sure to have better internet than what I have right now, so we don't have that little connection error. But for next week, we'll do the same time, Friday, 1:30.
Beautiful. All right. Thank you very much, man. Very good information. Very good.
It's fun. And I'll see you guys next week. Have a good one, everybody.
Thank you, man. All right, guys. And that will conclude that. Like I said, we will be back tomorrow. Next Friday, 1:30 for the same thing. It'll be another educational stream, guys. So YouTube, Kick, Twitch, Rumble. Hope to see you guys back. And as always, guys, stay consistent out there.